Hi, and welcome again to another edition of Vantage Markets Market Analysis for today, December 4th. I'm Giovanni Benacourt, and this is a recording about 45 minutes prior to the USA session open. All right, well, let's talk about the market and its trajectory. Well, we've seen the Magnificent Seven group of stocks, the ones that were mostly responsible for the overall market's gain the past few years, have been through some ups and downs this year, but the strength of big technology firms all over is still remarkable. The latest standout is Meta Platforms, the parent of Facebook, which finished yesterday at a record high. Apple's performance is also impressive, finishing at an all-time high, even though a few people seem impressed with the artificial intelligence features of the new iPhone. The tech-heavy Nasdaq index closed at record 2. Now, the question is how long the incredible rally can last, or what might possibly stop it. Big tech has batted away plenty of challenges in the recent past. The fastest inflation in a generation, followed by the highest interest rates since before the 2008-2009 financial crisis. No problem. Geopolitical turmoil and trade tensions with China haven't been much of an obstacle so far either. The last time tech stocks took a nosedive was in 2022. The problem then was a hangover from the COVID-19 pandemic, when demand for tech products boomed and then led to firms overinvesting and overhiring. If they learned the lesson from then, they are unlikely to overinvest in AI now. There is a risk that expectations are already so high that a pullback is due. Every NVIDIA earnings report seems to have the company beat an analyst's inflated estimates, only for the stock to retreat in the immediate aftermath and climb again thereafter. This one stock accounts for about a quarter of the S&P 500's gains so far this year. The biggest threat now is probably President-elect Donald Trump's plans to raise tariffs and rekindle international trade wars. If that backfires and ends up damaging U.S. companies or causing a recession, then tech could get caught up in the fray. But until we know more, there's little to stop the sector from going higher still. That being said, yesterday we came in and used some of our tools available to us, like the Fib trend-based Fib extension and the Fib retracement tools. This to figure out to use those levels as our probable levels of support and resistance, those Fibonacci numbers. So we saw yesterday how the market did rally to the upside and just basically hitting that all-time high made from last month on the 11th, and then just retreated a bit. And today we continue with that momentum to the upside through the London session, and so with that overspilled into the US session. So therefore we need to obviously update our levels. We had used our first level of support as the pivot point that we had made yesterday. But initially, let's just use the trend-based Fib extension tool, so we can come in and determine where all of this will move to. So using the tool, do you want to use it now just on today, on yesterday's fluctuation, or this week's fluctuation? That will be obviously 2 candles. So you could do that. So let's just start from the low, and then just measure this movement that we are so far. Because if we were to just measure the extension yesterday's movement and then just come down towards the open of today, where the market opened, then we be just right there using that. I mean, that's one way to use it, okay? And so therefore we be updating our levels using the golden ratio and the 0.38%. So you can do that. And then to figure out the retracement part, then we come in and say, okay, how much lower, where can we move to, and where can we find those levels? So here we have the tool where you can just come in and figure out just using those levels. So take the golden ratio and then the last 0.38%, and that way you can just, oh shoot, I deleted again one of the lines, so need to do it again. About so, okay, and there we go. Okay, so here we go. Since we are trading in new territory for the Nasdaq, is the best way to do it. If there was already past history, past data, then we can just come in and look for double tops, some dojis, volume clusters, previous levels of support, previous levels of resistances, so things like that. But in this case, in this particular case, since we are in new territory, it's the best way to go about it. So here we are, and the momentum, is to the upside. That's for the Nasdaq, and you could do the same for the rest of the assets. In this case that we have here for the S&P 500, since we are basically right here violating that first level since yesterday, we'll remain with the second one, and we'll just bump up this one to the top of the Bollinger Band. That's another way. I'm just showing you another way, obviously. And then, in regarding the support, you can leave the previous low as a possible level of support and just use a round number of 6,060 as our probable level, first level of support for the S&P. And the momentum is buying, going long, staying long. As far as the Dow goes, though, we are entering a trading range. Okay, it's basically in balance in the market, making equal high, equal lows. So a breakout is imminent. Now, where the breakout will be, towards the upside, to the downside. The RSI is not even entering the overbought territory, so we could contemplate the idea that we could probably have a breakout to the upside. So we will still have the same levels that we placed yesterday because they weren't broken. They were violated yesterday, but they weren't broken. So crude oil. All right, so crude oil is going to have some volatility this week, as tomorrow the OPEC will be having its meeting that they had backed up. They had a previous meeting, but they changed it to tomorrow, and they are looking for obviously different scenarios from their point. They're going to be discussing when and how to begin easing the ongoing production cuts. The alliance looks to have dug itself deeper into a position between a rock hard and a place again. And although they are not publicly admitting it, OPEC and its allies want to keep oil prices fairly high, as many of these need oil to trade at least above 80 per barrel to avoid budget deficits, and in some cases like Saudi Arabia, above $90 a barrel. So therefore, now what is the downside on that? That obviously all non-OPEC members will also be joining in that fray, which will be like obviously some countries like the US, Brazil, some other producers that are not in this group. And so obviously that will bring a lot more supply to the marketplace, and obviously that will put pressure on prices. But nevertheless, continuing with that rhetoric, We want to be able to identify levels where we could probably find some resistance. So the first one that jumps at me will be what could a lot of people may say, nah, that's not a double top, but to me it is, because the wick, I count the wick, I use the wick for some reason. The wick was created, and that's the high. That was the highest range of that candle, and it was basically the same as where this one opened. Yeah, I mean, it's debatable nowadays, so I'm just gonna use it as a probable level of resistance. So far right now today, we are picking above our head above the first that we had placed yesterday, which was the 50-day moving average, which again acts as a dynamic resistance level, but it's gonna still be there, and I'm just gonna use 71 as a psychological level of resistance. Again, I'm just gonna move a bit higher for the 20-day moving average within the Bollinger Bands for be my first level of support, and my second level of support. I'm just gonna use 68.50 because it's just a value where I can see that it tells how the most candles to my left. So 1, 2, 3, 4, 5, 6, and then 7, 8, 9, 10, 11, 12, 13. Out of this, completely range, almost an entire month. So that's why. That's just one of my ways of doing it. You can adopt it, or you can just tweak it, or use another one. Then we have Nat Gas. So Nat Gas is in a tear, trading lower. We're gonna leave that 270 there as a support, and then use the 50-day moving average as our second level of support. Now, I mean, resistance, we need to bring it down, obviously, 290 for that, and then $3 round number, psychological round number. So that's that. Let's see how much lower will it trade. Okay. Let's see when will it find bottom. Then gold again. Gold is also doing a sideways trading. Not it's ranging. Another setup. It's a setup for another breakout. It's not a possible breakout. It's going to be a breakout because we are doing equal highs, equal lows. The market has just been obviously doing this. So one way that you want to be able to identify when the market will, when can the market probably be able to break out? Well, you have obviously your fluctuations, and then if you see something like this, then it's to the upside, right? And then to the downside will be something like this. Boom. Then that will probably be breaking to the downside. So far, we are looking it to be, we're looking at it to be more of like this so far, perhaps, or it could just also stay trading sideways for a little while longer. Then silver, that 50-day moving average is acting as the dynamic resistance level for it. It rebounded off of that. The 20-day now was just completely passed, but the market has within today has fluctuated below it and then recovering. So perhaps now the market will attempt another leg up and break that level of resistance. Copper. So copper see the breakout to the upside, fluctuate above the 20-day moving now, the 20-day moving average. So favor to move to the upside. Bitcoin. Again, Bitcoin is not if, but when will it reach 100,000, 100K? So since we have fluctuated a little bit above that, we're just gonna keep it. We haven't broken it. We didn't violate it yesterday. So today let's just keep the same levels. Sideways movement so far for the crypto, and then the euro. The euro is looking really strong to stay above around 105. So let's see if that will be the case. Momentum is picking up to the downside, however. Then the pound seems to be also just in tune, doing some ranging. So it's creating a range so far. Let's see if it'll break out from that. And then dollar index is the one that most likely will continue to put some pressure on the currencies and the metals. It did. So this candle closed down here. Okay, it closed at 106.194, which is somewhere around here. And this candle opened up here. That's a pretty big gap up. It was closed and it's continuing. So momentum to the upside is favoring for the dollar index, and if that happens, then we'll see a lot of pressure on the other assets, commodities. Have a great trading day, and I'll see you tomorrow.